Welcome to Sand Compounding. This is Sandeep Anand. Today I'm going to explain a beautiful transformation story, case study of a tech giant, how it transformed and how it leveraged the power of subscription and cloud. And that is Adobe. Adobe is known to all of us, but Adobe was literally almost on the verge of shutting down and with degrowing for years, almost a decade. But in 2013, 2014, with our leadership, under the new leadership of Shantanu Narayan, Adobe rediscovered itself. This is a very interesting case study what I'm going to present, and you will see how my investing framework also is. I will be taking core business segment. I do the segment and analysis as a first step. So this will be a good framework to follow. So that's how I do my typical investing process. Now let's take a look. Adobe has three core business segments. To start with, the largest part of the segment is Creative Cloud, which is also the digital media. The key product in the repertoire are Acrobat, Experience Design, Dreamweaver, and Animate, Photoshop, etc. And Creative Cloud has been a phenomenal success for Adobe, and Creative Cloud forms almost 70% of the revenue, which is a significant portion of it. Creative Cloud has been growing literally at 25% year on year over the last few years. Then they have the second segment of the business, which is document and publishing. It's not too much of revenue generator for Adobe. It has some products like Contribute, PageMaker, Frameworker. That's just growing at 15% year on year. Then there is Experience, which is the digital part of it. And Adobe Marketing, Experience Manager, and Media Optimizer are blockbuster products of Adobe. And also Adobe has the Sensei. Overarching all of these three business segments is their AI, artificial intelligence platform or framework called Sensei. Sensei is powering the machine learning, and it is helping enterprises build customized workflows and intuitive applications. So Sensei powering the extensible AI and machine learning framework. So put together, Experience part of the Adobe business forms around 27% of revenue and approximately growing at 20% year on year. Now let's see how Adobe launched its subscription revenue. When it was launched in 2013, how it has grown over the last 4 to 5 years. It has grown at a staggering 60 times in last 4 to 5 years, and it has got a great clientele like Coca-Cola, Hyatt, Major League Basketball players, Mastercard, Royal Bank of Scotland, and to name a few. These are all cross-cloud customers of Adobe.
Adobe launched its Experience Cloud in 2017 to venture into marketing, advertising, and analytics. The key products were, Media Manager and Media Optimizer and Experience Manager. Now, programmatic advertising, media buying is the road ahead for digital marketing trends, especially with the advent of new channels in the media streaming like YouTube and Roku and others. And almost all other media giants are entering into creating channels in terms of streaming, which is a significant driver of growth for Adobe in terms of programmatic advertising and media buying. Now, key industry products are, discussed there, Audience Manager and Media Optimizer. And this is underpinned by Adobe's artificial intelligence framework called Sensei. And strong content management integrations with Adobe Creative Platform gives that complete suite of experience for the customers. They have a prolific, customer intelligence through Sensei and channel analytics and audience enrichment.
Really, Adobe played it right. They hit it on the right time in 2013, and you could see the whopping 60 times growth of the business model they had. So that is the story behind the transformation. Now let's get into the financials and valuations. So Adobe is valued at $120 billion by market, with a cash position of around $5 billion. They are targeted to revenues around $11 billion in 2019 and operating earnings of roughly $4 billion. So the growth has been significant. If you see, like over the last 2 to 3 years, revenue had grown around 25%, and with operating income and the net earnings growing almost by 50% over last 2 to 3 years. Now, cash flow from operations in 2018 was $3 billion. So Adobe is valued quite at a premium by market, considering it's at almost 33 times 2019 projected cash flow and 33 times operating income before tax. Now that's a premium because of 2 to 3 factors. Because subscription based growth is still not done, and the digital media is only expanding in the foreseeable future. At least for next couple of years, we don't see the advertising in media reducing, because there is no economic lull at this point. And it's a high operating margin business with almost 30% margins, and high return on equity, because company generating roughly around 23%, which is quite staggering. So putting all these together, there is a premium that the market is demanding. Another factor that we need to consider with respect to the growth ahead is the entry into commerce, especially the web online commerce and digital commerce. So basically, Adobe had acquired Magento Commerce in 2018, which was a missing leg. If you see in the business pillars, Adobe has Creative Cloud, they have the experience, they have the Adobe optimizers, but the Magento would bring in an end-to-end commerce product suite with things like web store customization, order management, analytics, payments capabilities, and including shipping and logistics, which Magento is a leader. Gartner had put them in the magic quadrant for digital commerce as a leader, and they are having almost 16% market share. I mean, they are rivaling with Demandware and Shopify at this point. So digital commerce could be a good play ahead for Adobe. Now let's take a look at some of the factors on growth. As we discussed earlier, subscription model, recurring revenue of almost 90%. That's a share of revenue in recurring, and it's still growing at 20-25%. So the subscription model is still kicking, and the new media related advertising and marketing customers are only increasing, and geographical expansion is happening. Now bundle services, with Magento acquisition, and recently the Marketo acquisition also into place, that's going to drive and aid the B2B growth in digital commerce. They do have strong partnerships with Microsoft, Google, which is helping a lot in terms of integrations, and a strong management, of course, with Shantanu Narayan being at the helm. Risks, not quite to the business though, but primarily from a competitive standpoint, Salesforce is also driving quite well in the digital space, and the Marketo acquisition synergies are yet to be evaluated, so we don't know how it's going to turn out to be. And there is a competitive scope we already spoke about, and subscription-led revenue is almost half or more than that through. So we don't know, maybe another couple of years that growth would be ahead. So those are some of the risk factors about Adobe. So this was a case study of Adobe, how it transformed in the, and how it leveraged the cloud opportunity with the right time. Adobe is still a great investment opportunity. There's no recommendation, but it's just a case study to demonstrate my thesis on Adobe.